talking, I can't hear you, Mike. So I don't know what to tell you.
Oh no, I ain't talking. I ain't talking.
Oh, okay, but yeah. So I was saying, like, did you want to add anything as far as the support and resistance, like your input, your tips?
Oh, another tip for y'all: when y'all looking at those supporter and resistance lines, pay attention to the wicks, because when you see long wicks, that indicates like buyer exhaustion, seller exhaustion, and you know the market's finna make a turn. So just pay attention to that as well.
All right. So yeah, Lynette, just let me know when you get it done. I'm gonna share my screen again for a second. So yeah, like Keaton, you pretty much got it down packed, right? Just support resistance, like where to put it and stuff like that. So yeah, like I said, the reason why support resistance is it's important. It's also the bread and butter to everything. Okay, so like say when we start doing it, you will start to trade triangles, right? And triangles and any type of pattern, there's support resistance within those patterns, you know? So just for an example, like I said, we're not gonna go into it, but I'm gonna just show you just for an example. Let's say that the market's doing this and then it starts to do this. All right, it starts to consolidate but going downward at the same time. So really, you can take this trend line right here, you draw the top, that's resistance within that pattern, and this is support on the other side. Wait, hold on. Yeah, this is support on the other side. You see what I'm saying?
Mm-hmm.
Like I said, it's the bread and butter to everything. So this right here is a bearish flag. Okay, it's a continuation a bullish flag. It's a continuation pattern in order for the market to show you that it's trying to continue to go up. Okay, but we'll get more into that when we go over it. But in this flag, you see the support and resistance in between.
Yeah.
Okay, so yeah, that's all I'm trying to really say. So Lynette, you got it?
I'm signing up because I hadn't signed up for this.
Oh, okay. But yeah, right here, support right here. Let's see. You can put one right here. See, the market came down and hit that, and then on the other side, respectively, right? Go to the left. See what we're looking for. Gotta wait for my computer to load. Not gonna wait on it. But all right, you guys get it. I'm just waiting on Lynette here.
I'm signing up.
There go one right here. Some resistance. Boom. Look left. Act as support. Easy money right there. But yeah, that's pretty much it right there. You can put one right here too. Support. Came down, hit this. Then the other side, act as resistance. I found that so beautiful. It's almost poetic.
It is nice putting one down and then seeing, like, looking back and seeing it, that it reacted in the same spot multiple times.
Yeah, and that's very key. Like, I mean, right here, you could just put one right here. That was a good little support. Bounced off 3-4 times. Yeah, you look left, you'll probably see some reaction. Yeah, right here. Bounced off before going back up. And on this side, there's a resistance.
Mm-hmm.
Just like I said, the market is always going to repeat itself. That's why it's just that's why I say all the time. It's not easy, but it's simple. Once you like master all this stuff, you get it down packed and stuff like that. It'll just be so simple. You'll look at a chart without even marking it up. Like, oh, that's a buy. Like, oh, that's a sell. Like, oh, it's turning around without even marking anything up. So, Keaton, you said you wrote down some questions, right?
Yeah, I have a couple.
Okay, go ahead.
So a couple of these you already answered. So let me see which ones I got. Do you use a position size calculator often, or do you kind of just do that on your own? Because
Nah,
I saw
I
you don't use it. Okay.
Like I said, just really, I don't really use stop losses that much because, like I said, I told the guys before, like whenever you start trading live and stuff like that, your broker can see where you put your stop loss at. So a lot of times, if you put a stop loss too tight next to your entry, the market would get pushed just to hit your stop loss and then go in the direction you already have projected going. You know, And then
Mhm.
plus my entries, I don't really need stop losses. You know what I'm saying? Like, whenever you guys get to that point, I think it's like advanced, it's an interlude or whatever like that. It's like a class in between the advanced classes. I'll show you guys how to get like entries to where you're a drawdown to where you only go like no more than 15 pips into the negatives. So you don't really need stop losses because it's going to be straight profit when you get in. But risk management, what I would say about that, as far as like risking 10% of your account and stuff like that, I mean, you can do that all you want. I mean, I don't do it. My risk management is knowing that if I have a $300 account, I'm not going to be trading with 50 minis or even a standard. I'm over leveraged because all it takes is, like I said, 10 pips.
Yeah, you don't want to make like 1 or 2 trades and your account be done.
Yeah, exactly. That's really risk management right there. Just don't be stupid and just you trade with $100, but you're trying to do like I said, 10 minutes. Like all you got to do is go down like you don't have to get far.
Yeah.
So yeah, give yourself some room for error. Go ahead.
And said it's wise to have like multiple accounts for like maybe an account for each pair you trade. Do you do that, or you just have one account?
No, just have one account.
That's what I thought too, because she said it might be good to have like a different account if you're trading like a couple different pairs on each one, and I hadn't seen that before, so I was just wondering what y'all did.
No, because what you want to do is stick to 1 to 2 pairs. Okay, because I was talking to Lynette about that the other day. Go ahead.
So you do one, like you just do 1 to 2?
Yeah, me and Mike, we trade the same pair. I always say like trade 2 pairs. I trade the Australian US dollar primarily, and UCAD, US dollar, Canadian dollar secondary. You know, and those pairs are inverse as well. So the reason why it's good to do that is because you can like learn more about market behavior, market psychology by doing that versus looking at the Australian dollar, US dollar, and be like, oh, it's not doing what I want to do. I'm gonna go hop over here to UJ. I'm gonna go hop over here to the euro and stuff like that. You don't want to do that. Basically, with these pairs, you gotta act like you're dating them. Okay, you gotta like figure out what the Aussie dollar likes to do on the weekends. What's this tendency? What it likes, what it doesn't like, stuff like that. It's kind of like dating a woman or dating a man. It's where like you just figure out what they like. Then once you do that, it'll feed you for the rest of your life.
All right, cool.
Ooh, do not be like me then, at all.
Yeah, don't be like Nick. We're fixing that with Nick. We're fixing that with Nick though. But yeah, you don't want to be paranoid. It's almost like cheating. Like just be loyal. Just be loyal. Once you be loyal, you'll be good. You'll be fed. But when you start cheating, a lot of stuff, just a lot of drama just starts to happen.
All right.
You got that, Lynette?
Yeah, I got it signed up, but I think I'm in the stock market, so you'll have to show me how to get to the Forex.
Oh, just there should be like a category you can click the words Forex, or just type in EUR USD, or just share your screen right now. Let me stop sharing mine.